Hi there, traders. This is Matt Krupski here with your weekly options beat here on Tuesday, May the 23rd. This week we're looking at open interest in June gold options. June happens to be a very heavily traded month in the gold options. Typically June and December are your biggest gold option months. Looking at open interest currently in the options, we've got over about 350,000 of open interest combined calls and puts in gold options that are coming off on Thursday, May the 25th. So a couple days left here on this chart. Right now, gold trading right around that 1260 line, the red line on the chart. Here we have the chart. It's calls and puts by strike. You know, what I did, because there's such a large open interest in June gold options, a vast majority of these options are already out of the money and are going to be nowhere coming close to being in play this week. Because it's such a heavily traded month, June, like I said, June and December tend to be very active, but you also have, you know, stuff that's way out of the money in the 2000 line, the 1500 line, you know. So if you just look 100 points above and below where we are now in the market, basically from 1150 to 1350, of the 250,000 open interest in calls total, about 100,000 of that, or only 90,000 of that, is within 100 points of the current market. So I just took a look at close to the money, basically not even close to the money, just within that 100 points up and 100 points down, from 1150 to 1350. If we're trading at 1260, about 34% of the calls are in the money and 18% of the puts are in the money of the open interest between 1150 and 1350. Pretty well balanced. And looking at the graph, you can see there's not a huge outstanding line. You go up to 1300. As to be expected, round number, large open interest above 10,000 at the 1,300 level in calls. Similarly, on the downside, at the 1,200 level, we have about 8,000 open interest in the puts, but it's pretty well evenly dispersed in between those two lines. And with not a whole lot going on, that 1,250 line sticks out to me. You know, it's got the highest call, highest put line. If we do drift down to there, it takes the calls down from 34% in the money down to about 28%, takes the puts up from 18% in the money where we are now to about 23%. So it wouldn't surprise me at all to see us drift back down towards that 1250 line and maybe peg that strike on Thursday expiration. So a lot of times you can see in the gold, you see some wacky moves going into expiration, but with the general normal distribution of the strikes here where we are, I would be very surprised to see any sort of large move between now and expiration. So not a whole lot to do. I would lean to the short side just to drift down maybe another 10 points. So that's my thoughts for this week with June gold option expiration. If you have questions about why we look at option expiration, feel free to shoot me an email, hit me up on Twitter, give me a phone call. Love to talk to you. Remember, these are my thoughts, not those of ADM Investor Services, or Chartered Financial Services. Thanks, and have a great day.